I'm Angeline and welcome to Beat the Street, the show that gives you the tradable news and data you need ahead of the Wall Street Open. Coming up, brace for impact, investors eye Powell and this Friday's keenly watched jobs report. And Bitcoin back on its upward trajectory after touching an all-time high. Gold shines and is holding near a record high, with investors now watching for Powell's testimony. Now, plenty of news out there, and of course, we are now counting down to the open. But first, let's just check in on that February ADP employment data for you. And it looks like it's just ever so slightly below expectations. We were looking at for 150,000 for February. We got 140,000. This is the ADP national employment. And at the moment, it looks like we are seeing the gains hold. Just looking at stocks here, this is the Dow Jones Industrials. I've written and drawn a bar there to show you when that figure came out. It is trickling ever so slightly higher as we speak. Similar story there for the NASDAQ, but that's come back off now, giving back any of those gains that were seen after that ADP figure. The US private payrolls rising slightly less than expected in February. Now let's cross live to Chris Vecchio in New York for the very latest. Chris, we've got Powell as well speaking later on, beginning the first of 2 days of testimony on Capitol Hill. How is all this going to pan out depending on what he says?
Well, right now we have to consider the fact that rate cut odds have been absolutely decimated over the course of this year. If this testimony was going on, say, on January 1st, when the market was still pricing in 7 cuts for 2024, you could say there was some serious risk that a hawkish tone from Fed Chair Powell could upset the apple cart. But that's not necessarily the case now. There's only 3 cuts priced in. In fact, through the end of this year, there's only about 78 basis points total, which is right in line with what the Fed told us they were going to do with their December summary of economic projections. So a Powell today that comes out and says that the unemployment rate's below 4%, that growth is still strong, north of 2 to 3% in real terms, 6% plus nominally, and inflation that has not yet returned to target, there's going to be no indication that a cut's coming. So I don't know who's expecting one, quite frankly, out of today. It's if he suggests that a cut in the first half of this year may not be appropriate. That's what could be the trigger to get things moving, because quite frankly, that's all we have left. The odds of a March cut are 2%. The odds of a May cut are about 15% right now. It's June or bust. And then the calendar gets really short really quickly, because you have July, no meeting in August. September, you can't do anything because it's the meeting prior to the presidential election. No meeting in October. And that only leaves November and December left to get anything else done. So if you want to get 3 cuts this year, starting in June is probably the prudent thing to do. That's the line in the sand for today's market action.
Sounds like a really small window, Chris. The other thing is the Friday report, the non-farm payrolls expected to have risen by 200,000 jobs after rising 353,000 in the previous month. Do you think we're going to get that figure, or is it going to surprise?
Well, look, the typical reaction for someone who sees an ADP report like this today would say, oh, jobs are starting to lose steam. But there's been a few research notes out recently that have noted that ADP has effectively had an inverse correlation with non-farm payrolls. So when you have a bad ADP number, odds are that you're going to see a better non-farm payrolls number. We can't dismiss the fact that the U.S. economy has been holding up stronger than a lot of people think. And another number that suggests we are looking at a world where inflation will stick around. It will be problematic for the Fed, and it could be problematic for the markets, plain and simple. The fact is that Federal Reserve officials are Phillips curve economic theorists. They believe there's a relationship between better jobs and higher inflation, and so they want to see some evidence that ultimately the labor market's cooling, and this data could run afoul of that, plain and simple. Bonds may see their recent rebound snuffed out. Stocks could get a little bit weaker. I think for traders, the line in the sand, at least for the S&P 500, I'm looking at the ESH contract, the March futures expiration, 5,060. We pivoted off of there yesterday. It was the swing low last week. If we're above 5,060, bulls are in control. Below there, then you could start talking about a top and start looking south for perhaps the next few weeks.
Thanks very much, Chris Vecchio there from Tasty Live, part of IG Group there. One of the big things is not just the interest rate decision or when the timing of the cut's going to come, but also we do have some central bank action expected later today. It's the Bank of Canada, which is expected to hold its key overnight rate steady at around 5% or at 5%, according to most economists polled. This is even though inflation still looks to be sticky, even though they are easing. Economic growth in Canada also looking slightly unsteady. Inflation in Canada has been stuck stubbornly above the Bank of Canada's target of 2% for the last 3 years. And this is despite rates being at 22-year highs. So it's going to be interesting to see what the Bank of Canada says. No change expected. One of the other stories that is moving or likely to move the markets is, of course, stemming out of China as well. Morgan Stanley has cut its China fund staff amid shrinking assets and operating losses. Now, this is key because it comes in a week when we've had China unveiling yet more stimulus. However, the market deemed it as not enough, and the Hang Seng reacted. Also, we've had quite a steady stream of news linked to China this week as well. One of them being Apple. Just checking on the chart of Apple for you, if I may, because Apple is all sessions on the IG platform. This is a minute chart to give you a better indication of what's happening. But if I give you the 15-minute chart, this will also give you a sort of idea of what it's doing just before the cash open. It looks to be trading sideways as we speak, as we get closer to that cash open. Well, Apple earlier this week, there was a report that came out saying that its sales in China had slumped in the first 6 weeks of the year, and that really hit Apple's shares, as you can see here at the end of my daily chart. Now, a big thing that many people are talking about is, of course, AI and how it's going to revolutionize not just the tech industry, but every industry, depending on how it's used. A lot of it, this AI mania has also boosted stocks like Nvidia and also Microsoft. However, we've had a story recently saying that Microsoft, I'm just showing you the chart here because Microsoft is also all sessions. Microsoft, just giving you the 15-minute view, has been in the headlines recently because there was a report quoting researchers on Wednesday saying that the image creation tools powered by AI from companies including OpenAI and Microsoft can be used to produce photos that could promote election or voting-related disinformation. This comes ahead of a year that is filled with elections, notably the US election at the end of this year, but also there have already been a steady stream of dubious AI photos being investigated ahead of elections. Now, as I mentioned earlier, it's AI mania that has helped to power the Nasdaq in the last year and also so far this year. And its climb seems to be unfazed by any of these concerns surrounding AI. IGTV's Axel Rudolph has been taking a closer look at the Nasdaq ahead of those ADP numbers we had earlier.
Well, Angeline, today I'd like to look at the Nasdaq 100 because yesterday it came off quite sharply on the back of Apple shares hitting a 4-month low and Tesla shares dropping to a near 10-month low. And you can see here the index has also come off. And what I find really fascinating, and I've been talking about this in my trading the trade of the week, basically every Monday, that we have seen some negative divergence with regards to this all-time record high, which we made on Monday on the Nasdaq 100. Because as you can see here, that high, even though it was higher than the previous record high in mid-February, has not been confirmed by a higher reading of the relative strength index, the RSI, which has made a lower high. When that happens, that's called negative divergence. And in most cases, about 70% of times, it does lead to at least a short-term correction against the trend. In this case, this strong uptrend which we've been in since October of last year. And lo and behold, what we can see is the Nasdaq 100 coming off on that negative divergence. The question now is, if we were to fall through yesterday's low on this daily financial bet here at 17,805, would we then retest the October to March uptrend line around 17,710, which is a distinct possibility? But as long as we hold there, we still remain in this long-term uptrend. If we were to fall through 17,710 on a daily chart closing basis, I would expect the late February low and also the orange line here, the 55-day simply moving average between 17,335 and 315 to be revisited. And that is then the key area for the medium-term trend, because if we were to fall through there, we could form a major top. Now, I'm not talking about this happening, but I'm just saying that short term, it looks as if we are going to see some consolidation below this week's record highs.
Now, just a quick look at oil before Powell speaks. Let's take a look at the outlook first. Investors are, of course, keeping a close eye on any sort of US rate cut signals. And also, we're seeing slight support there after OPEC Plus as the production cut was extended. And China's growth target, though, lacked concrete stimulus plans as seemingly deduced by the market reaction. And oil has rebounded slightly after 4 days of declines, but not by much, it has to be said. It's still in that sort of narrow band, if I can show this to you by drawing these two lines on this Brent crude chart. And until we see a breakout on either side, it's pretty difficult to see where, when this chart is going to break out from this very narrow sideways channel. A lot of it will depend on what US Fed Chair Jerome Powell says at his monetary policy testimony to Congress on Wednesday and Thursday, and of course, Friday's key jobs data. Now, before we go, let's have a last look at how the market is looking and checking in on the Dow Jones Industrials for you. This is the 15-minute chart to show you the reaction after that ADP number. It is still holding on to gains there, but extreme level of caution being seen ahead of Powell's speech, and of course the more data a bit later. And that's your latest Beat the Street. For more analysis, do tune in to Angeline Ong at Twitter. And also Jeremy Naylor will be back at 7:30 to give you a heads up to the European trading day. This is IGTV.